Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel. As always, I'm joined by Joel Elconin and Dennis Dick on the show today. A lot to cover. Two guests for you. First up at 8:15, we are joined by Kenny Glick. He is the owner and creator of HitTheBid.com. And then at 8:35, we're talking some Puerto Rico bonds with Cate Long. She is the founder of Puerto Rico Clearinghouse. But before we get to Kenny and Cate, we got to talk about some earnings. Got to talk about FIZZ and their crazy press release from yesterday. Celgene has some bad news. The company formerly known as Taser got a comment letter from the SEC. So lots to discuss. Joel, how's the market doing?
S&Ps are acting normal again here. We're up 6 1/4. Nice pop overnight. I believe that's when the budget was passed. 71.75. That is your pre-market high. That's your first target on the upside. After that, I'll give 2,600, 2,700, 2,800, 2,900, and then 3,000 in the S&Ps. I'm going to go Kenny Glick on you. And crude down 37 cents at 51.14. Still a trading range for the crude oil market. Gold down $5 at $12.85. And silver still above $17 at $17.20.5. Both in the red. Well, we have to bring Dennis on and thank him for all that unrelentless, unhedged buying he did at the open yesterday.
We said it has to be BTFD forever. It just works. Don't even close your nose, close your eyes, plug your nose, and hit the buy button, and it seems to just continue to work. It worked again. Did the Dow close positive yesterday? I know the S&P had just barely missed, I think. The futures, they just missed, didn't they, Joel? Or did we close positive?
They missed it by like a couple ticks. The all-time closing high.
The Dow closed positive?
No, actually, we made an all-time closing high if you consider the SPOOs and the after-hour trading. You did have the all-time closing high at 25.60. We went off the board at 25.60.50. So all said and done, a new all-time closing high in the S&P yesterday.
Yeah, so honestly, obviously, one day it's not going to work. But I tell you, BTFD just continues to work, buying the blank dip. That's what, somebody was asking me what that is, and they talk about it on Twitter all the time. Been talking about it for years. I mean, it's worked for years, at least on the S&P. And yesterday, everybody's throwing, there was a lot of people nervous yesterday off the hop. Apple was way down. Even I was a little bit nervous. But then we got done, we were saying on the show, I'm like, well, in all likelihood, we're probably going to close positive. Fuzzy said we're probably going to close positive. Good job, Fuzzy. And we almost did. Almost did.
Didn't young Garrett Cook? Did he have the BFTD broadcast? That was like 3-4 years ago.
Maybe. Oh, he did.
Was he the originator of it, or did it come out before that?
No, I don't know who invented it, the BTFD thing, but anyway, it's on Twitter all the time. You see people tweeting about, just buying the dip, and it just continues to work in this relentless bull market. There's just so many money managers that are sitting on the sidelines with their cash, and they see a 0.2% pullback in the S&P. 0.2% is a pullback now. That was basically, the equivalent of the 1987 crash yesterday when we get a 0.3% pullback in this market.
Yeah, it was weird.
It's ridiculous.
The circumstances of it and everything, that yesterday was the anniversary. We had our first double-digit SPOO down open in a long time. Dennis, did you enjoy that chat with Greg Bruno yesterday?
Great chat on talking. I love the floor talk, especially talking back in 1987, the Soros order coming. I didn't know, I'd heard about that, but I never got the whole story really, how that happened. 2 days later, that's a good story there, John. You had some details on that too.
Yeah, I can't believe I remember the names of some of the brokers and some of the sports information. My daughter Dana says, I can't believe some of that stuff you remember in your head that, unimportant things. But maybe we'll do a floor show. And, we're talking about doing some special segments. And Spencer, you got a little announcement for Tuesday, don't you?
Oh, I think I do. We're going to have a special guest in the office. This won't be during the show. It'll be after. It'll be late morning, probably around 11:30, maybe closer to noon. we're going to have Gene Munster in our office, and we're going to be doing a live Q&A with Gene. So it's going to air on the PreMarket homepage. It'll also air on Benzinga's Facebook and Twitter pages, and it'll be a chance for you to ask Gene your questions, and then we will ask Gene your questions for you in the live Q&A in our office. This is again Tuesday late morning. So
I think we're shooting for 11:30.
We're shooting for 11:30.
Yeah, we're gonna do 11:30 to 12:30, depending on how long. So think of your good questions. I've already got like a list full of questions that I want to ask him. But do that. He's a great guy, intelligent guy. Really, has made some great calls in the market. So he'll give you something for you guys to do in the middle of the day instead of watching CNBC.
For sure.
Yeah, you can tune in.
And if you have questions right now, just throw them in the chat, and where I'm collecting all of them in one place. So ask away.
So just to clarify, you'll be able to watch that broadcast right here on the site that you guys are watching
on the PreMarket Prep site. Okay. It'll be also.
So what time? Let's just say one more time.
I think it looks like it'll be around 11:30. We'll have more details Monday or Tuesday, but around 11:30 is what we're shooting for. 11:30 a.m. But again, it'll air on the PreMarket Prep website that you're on right now. It'll also air on Benzinga's Facebook page and Benzinga's Twitter page. So looking forward to that on Tuesday with Gene.
Yeah, and real quickly, if I know we got a lot of smart people in the chat here, Fuzzy and Jimmy A, Aviator One. If you have any questions right now, just like they're just burning a hole in your pocket, send them to me, and then I'll forward them to Spencer, and because Spencer's gonna be in charge of keeping track. You can reach me at joel@benzinga.com. That's pretty easy. So send them to me, and we will start compiling those questions. But Dennis, we got 8 minutes till we bring on Kenny Glick, and I want to find out how much GE you're buying today.
The GE quarter. All right, give us a number, Spencer, and then I'll give you my rant. I'll be talking against my book again too, just like Kramer.
Q3 EPS from continuing operations, 22 cents. The adjusted EPS of 29 cents may not compare, or may compare to the 49-cent estimate. Sales of $33.47 billion versus $32.6 was the sales. So they did better than expected on the sales, but they had a really bad quarter EPS wise, and they're cutting their outlook for the fiscal year. They're cutting their EPS. It was $1.62, $1.70. Now it's $1.05 to $1.10. Wow. So they're really slashing that fiscal year EPS guidance.
All right, I'm going to beat Kramer to the rant here today. He's probably going to give a similar rant at 9 o'clock when he's on CNBC. But me and Kramer are the only two that talk against our book. Everybody talks their book. We talk against our book. That's craziness. Anyway, I've had GE in my investment portfolio for 17 years, and now I'm officially really ticked off at this company because I was thinking yesterday, and I'm just thinking everybody is hating on GE so much. If they can even just come close to meeting any type of expectations, if they even just slightly miss, the stock's going to go up because everybody just hates this thing so much. Well, what do? They just report a complete disaster. They cut the guidance from $1.60 to $1.05, and they probably won't meet that. Man, this company, they can't get nothing together. Fire everyone. As a shareholder, I'm saying, fire everyone. I'm done with GE. I almost just feel like selling my shares at the market. I have 17 years. I've invested in this.
You know
company.
What you got to do, Dennis?
I got a lot of dividends.
Dennis, you got to sell it, and you got to go short. You got to go short in your portfolio. You got to do it. You got to revenge.
I should have short this a long time ago, but I didn't. I was long. I've been investing in this thing. I'm like, it's an eternal hold for me. I bought this 17 years ago, and I've been paid a lot of dividends, but they cut my dividend on me. Then I'm going to really be ticked off. And I think Deutsche Bank, we got to give some credit to them. They were calling us back at $28, and we made fun of them on the show. And we said, just because they decided to call 2 days in a row, so that's why we were making fun of them. But I should have heeded their warning. Kramer should have heeded their warning. Kramer, if you're listening, right with you here. This stock is just the dog of the Dow.
Deutsche Bank said back in May. In May, they downgraded the stock to a sell. So give them credit where credit's due.
Deutsche Bank, I wish I was listening to you. I should have sold my shares I held for 17 years. Long-term investing works in most companies, not in General Electric. I guess when they lost Welch, that was the beginning of the end. What year? Let's go back. Let's go to the month. When did Welch actually retire? Emmett was there, but Welch was like, 12, 13 years ago?
I thought it was closer to like 2000. No.
Oh, was it that long
I
ago?
don't know. Let me see. Let me look it up.
I basically bought when Welch. I should have not. Should have been not buying. When Welch left, it was over.
How about
2001 is when he left.
Okay.
In 2001, that's probably when I bought. I think I bought the stock in like 2000. So I bought a year. He retired the next year. I should have been selling then. So we had ML for a long time. It didn't matter. GE was $60 back in the year 2000. It's $21 here now. Here we are, one of the best bull runs of all time. Stock is down, basically 70% from its all-time high. What a dog. I'm glad. This is a good case for diversification, though. I'm glad I have all my eggs in the GE basket because that basket would have had a lot of yolk in it.
Dennis, diversification doesn't mean you have to have losers in your portfolio.
Well, it's hard not to have some losers when you got 100 stocks, but this one just stands out. I look at it every day and I just can't even stand looking at it anymore. And I'm almost ready to just go sell it, be done with it. I've had 17 years of this thing in my portfolio, stock doing nothing. They buy that, Baker Hughes at the highs, on the oil market there. They spin off Synchrony. They even gave me a shot to get out because you had the option. A year ago or a year and a half ago when Synchrony Financial came out, you can see SYF we're talking about. Let's go look when that was. Synchrony Financial was in 2015. They gave me the option and said, do you want shares of Synchrony or do you want shares of GE? And I'm like, well, I've stuck with GE for 15 years. I'm just going to stick with my GE. I could have gotten an equivalent amount of Synchrony, and I've been at 32.50 this morning because SYF is actually trading up because they actually report good results. So all the good stuff went with Synchrony Financial.
All right.
Oh, you got me wound up, Joel. I need to stop talking. Too wound.
Yeah, let me just say a couple things here with the GE. I'll give you the pre-market low, 21.86. This is the ugliest 15-minute chart I've ever seen in GE here. I'm not going to make any
I've seen a lot of ugly 15-minute charts here in the last couple of years in GE.
This is the ugliest, though. 23.70. You've had one green bar. 21.86 is the pre-market low. I mean, if you have a short, congratulations. Depending on your position, put stuff out, half and whole numbers or see what the low is in the pre-market session. And we don't have time to go over this now because we spent a lot of time on it. But I'm going to dig when this stock got the news of the CEO change and you had a big pop in it. And remember that, Dennis? I think it had a day or two follow through. I think that was at like 27, maybe even $28. So we'll look for that information. And you know who also got a big pop over a CEO change? Oh, Teva. Oh, boy, that was great that they got this new CEO in there. So don't fall for the new CEO trick. It just doesn't ever work. What do you got?
They've done so many things wrong. Even that $50 billion buyback. Remember that one, guys? Remember the $50 billion buyback? And I was the one that said, even I was talking, like, what are they doing? I'm like, they're doing a $50 billion buyback. The stocks went, basically from $12 up to $30. They're buying the highs. That's the one thing. The buybacks, they do them always at the wrong time. They buy the highs. I wish they would have raised the dividend back then or did a special dividend or just conserve that cash because we could use that cash now to protect their dividend. So anyways, they do this buyback, buy all their stock at $31, $32, and obviously that didn't work out for them. Then they spin off their best stuff in Synchrony Financial. Okay, done talking about GE. They're doing everything.
June 12th was the day they announced the CEO change.
Okay, and what did we do on June 12th here for revisionist history? We closed on the 9th at 27.94. We popped up to 29.47 the following day, and then boom, it's you got one other shot at 29 on that, and then it's been lights out ever since. 8:14. Let's cover one more stock, Dennis, before we bring in Kenny.
Let's do it. Let's go. We didn't cover because I did such a long rant. I want to go to Procter & Gamble, PG. This stock here, obviously widely traded and widely held as well. Not one that I have in my invest portfolio. I had it for a while there. I've sold it. Stock trading down the pre-market. Spencer, details.
Yep, PG Q1 core EPS $1.09 versus $1.08, beat by penny. Sales of $16.7 billion. That's in line with the estimate. They also reaffirmed their outlook for the fiscal year.
Simply not good enough. I mean, Johnson & Johnson blows it away. Stock is still going up J&J here. I thought PG might do the same. I thought, well, if J&J is giving us a lead here, and obviously, J&J's got a lot of other stuff going on than Procter & Gamble. They're pure consumer products, but J&J's, somewhat of a comparable. I thought P&G might blow it away too. They didn't. Stock has kind of, been just sitting here for a while with the whole Nelson Peltz and everything going on. But down $1.50 here. Market speaking, it's at $90. One thing I will say is there's always underneath demand, it seems like, in Procter & Gamble. So I don't think this is going to be a huge flush here today.
Pre-market low, 90 even, right on the kisser. That coincides with the low you had on October 10th at 89.86. Under that really opens up. But we got a guest that has made a great prediction. You want to bring Kenny in on the fly? Okay.
Frame it on the fly.
Let's do it.
Yeah, Kenny Glick of hitthebid.com. Dennis, when were we out in New York? In was it February or March? And
you know me, Joel. I have I have the goldfish memory, so I remember being in New York vaguely.
And
Kenny, are you with us?
I am. What's up, buddy?
Oh, what's up, man? How's it going?
You're live, Kenny, on Benzinga's Pre-Market Prep Show.
We're live already. Just right into it. My God, how are you?
We don't play games here, Kenny. We're on the clock here. Kenny, wake up! What's going on, buddy?
I just walked in. You know, I was out partying with my Grateful Dead group. We have a group called Wall Street Dead Ahead. It's basically the greatest group of people I've ever met. And we all love the Grateful Dead. We love finance. We talk stocks and music all night and dance and drink and party. It's great. Good stuff, man. I got to get you involved one day.
And what
I want to know is, did you raise your price target on the Dow?
Actually did. Okay. Now, these last 1,000 points, like I said, I thought it would take till March to get to 24,000. So obviously we're right here. I just want to give up props out to everybody who tried to short the market yesterday. I just want to let you know, I know you guys were talking about GE, and it really just fits into what the theme of what I wanted to talk about today was. If you go out and buy 10 stocks, random stocks tomorrow, 9 of them will probably be down. 1 of them might be up. But will the Dow be down? Absolutely not. Will the QQQ be down? Probably not. This is the most bizarre market I've ever seen. People, are still complaining about it. And, a couple of years ago, when people said, what stock should I buy? What I buy? You've done pretty well for yourself. I'm like, buy the market. It's the first time in history, 20 years ago, you couldn't do this. So if the quote unquote market goes up, the Dow, why not just buy the Dow? I haven't owned a stock that goes up a point a day pretty much on a regular basis in my life. This is fantastic. And right now, just looking at, let's look at an 8.5 to 10% rally for the next 5 or 6 years. Maybe we throw in a pause year or a possible pullback. I'm still looking at 40,000 by between March 2024 and 2025. So it's been a fantastic run. I don't know what to make of it because I've never experienced a market that really is prohibited by law to go down. But it's fantastic, and I don't think it's a cop out. As far as individual stock ownership, I hope you guys listened to me about a year ago when I said get into some Alibaba. It's going to have to make up for some wasted time while it just sat around for 2 years. But that's still the same situation. What about you guys? I mean, what do you guys think? I mean, out there, people are still waiting for this correction that never comes, right?
I mean, we're very sarcastic and tongue in cheek about it. I mean, if you would listen to yesterday's show, it was just like, what are you going to do in this situation? You're going to sell the S&Ps down $9-10 in the hole, doesn't even take out the pre-market low. I mean, it's just, an opportunity for shorts. That's the other thing why this market's not going on. Anybody that is short and has that kind of move overnight, I can't even go back and look the last time the SPOOs opened up down 9 or 10 points. So, yeah, I mean, it's taken me a while, maybe from 1,800 to 2,100 to be, to be skeptical. But Dennis is pounding in my head. I mean, your long-term portfolio. I mean, every Sunday when I'm looking at my books and everything, I'm like, okay, hedge. Put a hedge on this, and then and then I go back, and then next Sunday, I'm looking at, my books and everything, and I'm like, oh man, I'm up, but I better hedge, and I never do. And it's the options are so expensive. You buy some of these products, and I don't know. I'm fearful, but it's just such an unbelievable trend that it's impossible to fight at this point.
Right. But again, back to the point, just take a look at some of the stocks. I mean, even if you have AMD, if you bought AMD 15 years ago, bull market hasn't really, you're still underwater. But let's say you bought US Steel just, 9 months ago. You're down 20, 30%. Maybe you got some, AAOI, whatever the hell that stock is. I don't know what happened there. Or Twitter or Snap or there's so many stocks that are not doing well, yet the Dow just goes on and on and on. And it's like GE, so what? GE's getting crushed. Yeah. You know what they're going to do? They'll probably kick GE out of the Dow soon.
Oh, great call.
Coming.
You're not performing well enough.
That's
you can't
coming.
be in the club. You can't be in the club anymore.
Oh, you heard it first on Benzinga's Pre-Market Prep. Why not put Google in there? Yeah,
Right.
Why not? I mean, another tech stock, and it'd be a still got your Eastman Kodak shares, right? I bet you they're in your portfolio. Actually, Kodak is still traded, but all right.
What do you mean Eastman Kodak still traded? What?
Yeah, look at
it came out. They reissued the stock.
Yeah.
Seriously, they came back? I didn't even know they came back. Film's back in style.
Yeah, and it went from 1730 to 620. that was a real good. I think that was with all their patent. No, it was at 3773, and now it's at 620. But all right, Kenny, individual stocks. Is there any? I know you just talked about buying the broad indexes. I know you like to pick out some charts. I think we talked about CYH last time. You made a good call on that when I was getting beat up. Do you have any bargain deals here that you're looking at? You're just, accumulating some dogs that may finally get picked up. Anything on your radar like that?
Yes, absolutely. Well, I'm waiting for this BSTI. I'm obviously a Jack Ma fan, even though I think he's a cyborg. And it's funny that my favorite company is a communist country's number one stock with the Alibaba. So anything associated with Jack Ma and his cyborg army, I'm involved. I don't even know what BSTI does, but I heard Alibaba's involved. I'm in that stock. So as soon as QD came out yesterday, that was 2 days ago, it popped and then it dropped back to 30. I was like, hey, I could buy this QD at $30. Next thing you know, the stock goes up 5 points. It doesn't make any sense. I don't know what they do, but Jack Ma's involved. I like this BSTI, and the risk reward on the BSTI is fantastic because I know if it breaks under like 1050, it's probably going to 750 and probably to $5. But if you look at BSTI, it reminds me of BZUN, where that was a failed IPO for a while and it got crushed all the way down, I believe, to $4 or $5 and then took off to 40. I don't know if they're the same type of companies, but I got, I'm only holding, I've got the Alibaba, I got the BSTI, I got the QD, and sadly I had sold out. I remember we were talking about this company, Team, the symbols Team. It's an Australian software company. I had, I read a lot of good press about it, and I was like, it's Australia's only stock. How could it not go up? Probably got every Australian in the world, owns this company, but they're up 5 points today. There was one other thing I was looking at. Other than the, what was it? Actually, I did pick up some Snap lately, when it popped over 15, but nothing, every day there seems to be, a handful. We should be talking to Ace right now, the percentage gainer list extraordinaire mastermind. Some of these coming off these percentage gainers lists turn into, legitimate moves. I don't really trade, as far as these companies, what they do. But, when they start looking good on a chart, I'll get involved for a couple of days. But I really what I've done lately is I've cashed out of the diamonds and I'm buying, if you could believe this, I'm in March 2018 calls of a call spread. And then I went out to January 2019 and started buying calls on that. Because if you look on a January 2019, $235 call, they were $10 the other day. If you don't think the Dow's going up another 1,000 points in 436 days, I don't know what you're looking at. So again, I'm pounding the Dow until this thing breaks down. Like you were saying, you can't even retest the prior day's low. When we see that, I'll change my tune. But I'm staying with what's working right now. And if something does strike my fancy, I'll give you guys a call.
Kenny, what would it take for you to turn around and start getting bearish on the Dow? What would it take?
Okay, I need UVXY, the worst stock ever created in the history of the planet. By the way, if anybody's listening, UVXY is not a real stock. It's not built to go up. It only goes up if there's an Ebola plague or a nuclear cloud, killing people around the world. And people just want to protect. They think they're protecting their wealth by destroying it. It's not a real stock, people. But that being said, if UVXY actually can rally for 2 days and the diamonds give back somewhat of, I look at the prior day's lows and the prior day's lows behind that for a sell-off. So for me, if you want to, I have stops on. I'm ready to look to short against the calls that I have. Right now I have 230.15. So that's 200 points from here. If by some chance we're breaking under 230.15, I'm probably going to be looking to short. I'm not going to sell. The reason I became a trader back, 1999, 2000, I had a portfolio. And what I would do is, instead of selling my stocks, I would just short those stocks when they were weak against my portfolio. And then when the market would rebound, I'd still own my stocks, but I made a little bit while the shorts were happening. So I'm using that same philosophy that worked 17, 18 years ago. And, I'm going to be long the long-term calls. And if by some weird occurrence, the market actually goes down, I'll short the diamonds that day. And right now I have, right before that, I have 231, like right under 231, but then the 230.15 area is like my line in the sand. But, I'm not gonna sell. I'll just short term, I guess you want to call it. But if volatility ever comes back, again, we're in an unprecedented. I mean, you guys have been doing this as long as I have. We've never seen this before. And, we've never gone a full decade. We've gone 8-year, 9-year spans without, dramatic pullbacks or recessions. But officially, we've never gone a decade without a recession or, a 1 or 2, bad years. So right now we're in year 7. And, again, if we're going to remain in this unprecedented market, I'm just going to, continue to be absurd with it. It is really absurd, actually, at this point.
We've been on the line with Kenny Glick of HitTheBid.com, made some great calls in the markets. Kenny, it's always a blast having you on here. Boy, I'd sure like to find out when the Grateful Dead Wall Street Club is meeting again. I can only imagine the conversations that go on.
You can go. There's a website. I found it. You go to the website. I put in the chat, Wall Street Grateful Dead.
All right, Kenny, we got to get you out to the Motor City here soon, okay?
Anytime, man. Take me one of those football games. We'll grab Matt Kolb and we'll have a good time.
Yeah, he's on the other team, but whatever. We'll figure it out. Kenny Glick, HitTheBid.com, joining us here on Benzinga's Pre-Market Prep Show. Thanks, Kenny. We'll dial you up soon.
Thanks a lot. Good luck today.
Okay. All right. S&P futures up 5 points, 25, 65, 50. And what a great guy to have Kenny on, his perspective on the markets, and just a funny guy too, Dennis. We had a great time out with him in New York. So, okay, let's cover our third stock of the day here at 8:28 and 37 seconds.
We got a lot of stuff to cover because I just had somebody tweet at me too, and they want me to explain. Remember, it's option expiration here today. We got a late one, October 20th, but it is the third Friday of the month, so we are going to have some volatility here. I just had a tech reader. He says, please explain how market makers and large option holders jockey their positions on option expiration day. Do you want me to explain that now, or let's wait until the imbalances come out? So we'll do one more stock, and then we'll explain, just how this works on option expiration day with big institutions and with market makers and their option positions against the equities. Let's jump over here to last night's big winner, and it is PayPal. PYPL flying here. It's still this morning, up $3.65. This is a relentless stock. Another one that I messed up because I got this from my eBay holdings, got it basically for nothing back in the day. I ran up to like in the 40s, and I was like, you know what? I'm going to ring the register on this one. It's been a good one. Rang the register, obviously, way too soon. Stock's now $71. Spencer, details, PYPL.
I mean, it was good, but I didn't realize it was that good. Q3 EPS 46 cents was a 3-cent beat. Sales of 3.23 versus 3.18 billion. So beats on both for the EPS. As far as Q4 guidance EPS, 50 to 52 cents is in line with the estimate. Sales of 3.57 to 3.63 is a little bit higher. The estimate is 3.56, so higher, but only by a little bit. And the fiscal year adjusted EPS is also a little higher by 2 cents. Sales guidance for the fiscal year also a little bit higher. So everything was like a little bit higher.
And the stock's just a little bit higher, actually a lot bit higher. 5.87% it is up now. And the pre-market, Joel, can you give us levels?
One number,
I know it's all-time highs here. It's so tough.
71
around all-time highs.
71.44 pre-market high. That will be taken out probably by the time we bring Cate Long here on at 8:35.
In the next 4.5 minutes.
Yeah.
Joel's predicting. I should do a bet with you on this one.
Oh,
Joel's
you would have lost.
In the next 4.5 minutes.
You lost.
I could write him an option on this. I could write him a call option on this right now at 71.44 and try to collect the premium live on the show. Will it work when it expires at 8:35?
You would have lost the Verizon bet yesterday, by the way.
What was the Verizon bet? I already forget. What was I betting?
You would have lost it. I tried to get it. I tried to bet on a close over 49.75, and you wouldn't take it.
Oh, did you see that move yesterday? Though?
Oh my gosh.
That thing opened around $50. And if you said, oh, this is too high, I'm going to short that open, you got run over. That thing then ran to 51. This is Verizon. This is VZ. This is like a bond going from 50 to 51 in like a matter of 10 seconds. Maybe that FIZZ CEO has something right. And we're going to talk about that too. The FIZZ CEO blaming the whole world on high frequency trading. But anyways, 50 to 51 in like 10 seconds.
No, Dennis, it was 3 minutes. You're once again.
Oh, 3 minutes. I'm exaggerating.
Yeah, you're exaggerating again. But okay.
And then straight back down 3 minutes later.
Yeah,
just have the most vicious shakeout for the shorts ever.
Yeah, I mean, that would have been one just if you just a big gun, and you got a big account, and you just be like, just shorting the whole way up, just 5,000 at 50.5, 10,000 at 50.75, 100. You just keep selling because there's just no way it was up like 3-4.
We know how things work. Things can go a long ways. What is it?
Not
that
Verizon.
famous quote: "The market can stay irrational much longer than you can stay solvent."
Not Verizon.
Not Verizon. Except you have to look at the little asterisk that's sitting there, and it says not Verizon.
All right. How about let's answer that question before we forget about it.
Okay. So just to go over the question again from Tech Raider. Thank you, Tech Raider. Please explain how market maker and large option holders jack your positions on option expiration day. Okay. Lots of different ways they can do this. I'll just give you some examples. It's probably the best way to do it. Let's just take old Apple because Apple has a lot of options on a lot of monthly options, a lot of weekly options. You honestly can see this probably weekly in almost an Apple. But just for example, if you let's just say had the 150. Let's just say Apple, theoretically, around 4 o'clock is trading around 155.25. If you have the 155 puts, you will be in the money, obviously, if it falls below 155. So let's say at 350, the stock goes down to 154.90. Well, if you're a big option holder, you have two choices at that point in time. You can try to sell your options in the option market, which has no liquidity sometimes, although in Apple it would, for a dime, or you can actually buy the stock against your puts. So that's the way I've always played options. On expiration, I like to buy the stock against my puts. So if I have the 155 puts on Apple and the stock's up, I can buy the stock in the open market 154.90. Let's just say hypothetically I have 10 puts. So I buy 1,000 shares at 154.90. I'm now locked in. My $100 is locked in. So I can't, I'm going to make that $100 because if, in a worst case scenario that, Apple, just, keeps continuing to fall there. Well, I've already bought my stock back in and I'll be selling it at 155 with my puts. So that is over, and done with. That's one way to do it. But it's not over and done completely because if Apple decides to all of a sudden rally up to 155.10, well, now my puts are out of the money, but I'm long 1,000 shares. So I can actually sell my shares for $200. So now I sell my shares for $200 on 155.10. And actually, as I'm selling, there's probably other people that have 155 puts doing the same thing, selling the stock they just bought at 154.90. Stock maybe comes back down. It starts to go back down from that selling pressure. Maybe it falls back down under 154.90 or back down to 154.90 again. I can rebuy another 1,000 shares. So now I've just made $200. I bought 154.90, sold 155.10 on 1,000 shares. I just made $200. Now I get to do it again because I still have my puts. So I buy the 154.90 again for 1,000 shares. And that's going to put upward pressure on the stock as buyers come to the market to bring it back up. That action is called pinning. That is the natural action. People will say, oh, the market makers are screwing everyone, and they're basically, just trying to get the thing as close to 155 as possible. There's no conspiracy there. That is the natural pricing action of market makers trading the stock against their open option position. Just a hypothetical example here. But that's how pinning happens. When you have a lot of open interest at a strike that is close by, as you approach, from 330, 340, 345, as you get closer and closer to the close, that price is like a magnet because you have option traders that are buying the stock or selling the stock short, depending on, if it's above the strike or below the strike. So that's how, the natural pinning action works. And that happens on all the stocks. So you see this, on anything that has options on it. So that's the jockeying around, jockeying your equity position around your open option positions. That's how the mechanics behind it work.
All right. And just real quickly here, because you used Apple as an example, let me see if I can just pull up here on my platform. Open. No, we don't want that. What we want is the open interest. Okay. So there's some big money out there. Coincidentally, right around the strike prices that we're trading at, the 48,000 outstanding open interest and the 155 calls. Not as much in the puts here. Oh yeah, like why would you? The only thing you would do is sell a put in Apple. You would never. Well, yesterday would have been good to buy one, but look at the open interest and look at the pin on that one. All right, we're gonna take a quick break here, and we're gonna bring in Cate Long of the Puerto Rico Clearinghouse, and want to get her take on what's going on, the economic impact on Puerto Rico. We'll be right back with Cate. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel, working the boards, and we are joined by Cate Long of the Puerto Rico Clearinghouse. Cate, good to speak to you. How you doing?
Good morning, Joel. I'm great. How are you?
We're doing okay here in the Motor City, just watching this resilient market, but we wanted to touch base with you, based the hurricanes in Puerto Rico and the current fiscal situation over there, and bondholders. I guess if you're a Puerto Rican bondholder, you're not too happy right now.
Yeah, well, the litigation and the fight over the bonds have been going on for several years. And this is a devastating situation for the people of Puerto Rico, Puerto Rican government. I think longer term, I think all of us feel, that the assistance the federal government is bringing in, the federal funds that will be used to rebuild, Puerto Rico, the electric system, the roads, the bridges, people's homes. It's really positive long term for the island. But in the short term, it's horrendous. And you see these stories, people not having access to drinking water, food, medical care. I mean, this is, for some pockets of Puerto Rico, this is still quite a crisis. And bondholders, everybody's basically just, has to sit back and wait and, let events go forward.
So, I mean, and this is not my view, but, if you took a cynical view of the situation, you're going to supposedly wipe out all this debt, spend all this money, rebuild, and here you are in a, basically in a hurricane zone. So, I mean, is there any thought, the possibility of this happening again? I mean, we had how many 100-year storms in the last couple years here? Was there going to be any resistance? Is our, government, with everything that we have going on here, are we going to be able to finance this, or do you see some resistance coming?
Right. So one, the storm doesn't just wipe out the debt. There's still, legal security in place. Most of the debt is serviced by tax revenues. So if you assume there was no tax revenues for the next 20 or 30 years, then you would wipe out the debt completely. But there will be, there'll be revenues to service the debt, not all of it, but part of it. And in terms of rebuilding, I was just interestingly reading last night a piece from Katrina where the federal government repaid Entergy, which was the power company it is in New Orleans, to not only repair and restore the electric system, the transmission system, but to bury the lines. And they were allowed to use federal funds for that. That'll be something that Congress will have to look at in, the Department of Housing, HUD, going forward in the use of these funds. The Senate last night approved the budget legislation, which included the funds for Irma and Harvey, so Texas, Florida, and Puerto Rico. And now they'll have to sit through there and see, where the money can go. There'll be need for more money, and the Puerto Rican government needs to document to Congress specifically what the damage assessment is and what money they need.
All right, the back and forth with Trump and the verbal battles that are going on and everything. I mean, oh, Cate, I got you to laugh. Going back and forth with that. I mean, tough position for for the United States to be in. What's your assessment of how we've been handling it so far?
Yeah, so the stories, they're very mixed picture, right? So you hear from the military. There's about, I think, 17,000 military on the ground in Puerto Rico now, a couple thousand FEMA. They're working their tails off to get support and aid to people everywhere. And then you get people like the mayor of San Juan, who's basically a communist, coming out and, she initially came out and said that the U.S. government wanted to, do genocide to the Puerto Rican people. So, the stories that are flying around the media are just all over the place. And, basically the urban areas in Puerto Rico are getting power restored. They have their water for the most part. It's these urban or rural mountainous areas, sort of pockets of small concentrations of people that still lack a lot of support in terms of electricity and water and stuff. And that's just a push. Every day the military is down there trying, delivering food. FEMA yesterday approved a contract to pay somebody to prepare 100,000 hot meals a day and deliver it. That's very unusual for the federal government to go to a length like that.
All right, so I'm reading some articles that Illinois is toast here. Let's change the subject to the state of Illinois here. I mean, are they just going under? They're going to wave the white flag. Give us an update on the debt situation in the state of Illinois.
Right, so Illinois is about where Puerto Rico was 5 years ago, where they're triple B minus rated, just hovering right on this line between investment grade and speculative grade or junk. The Republican governor, as you know, and he's been trying to trim spending where he can, but they're going in. They have a budget this year which has like $1.5 billion deficit, so they're financing that through debt issuance. I just, that's not sustainable long term for any public entity that has to run a balanced budget. The federal government can get away with it because we issue treasuries and we fund, the national deficit with treasury issuance, but states can't do that long term. And, so the question is for Illinois, are they going to, turn this ship, or the Titanic going to keep driving into the iceberg? And, that'll play out over the next couple of years.
They're obviously not buying the dip. They got to get rid of those pension fund managers. I mean, the pension liability now is upwards of $130 billion. I mean, what are they investing in? Their pension liability.
Also in Illinois, the state constitution guarantees the pensions of public employees, essentially from when it was granted. So you can't retroactively go back and try and change the terms of pensions. And there's been a lot of legal cases that have, public employees have won up to the state Supreme Court and stuff. So essentially, in the case of Illinois, you have to do an amendment to the state constitution, which would change the language of that pension status and say that, given fiscal problems down the road, that the state can make adjustments to those pensions.
All right.
Either that, or you put Illinois into some kind of process like Puerto Rico's in now, which is, restructuring.
We've been on the line with Cate of the Puerto Rico Clearinghouse, updating us on the poor fiscal situation there in Illinois as well as Puerto Rico. Cate, Great seeing you on CNBC a week or so back. And maybe we'll get some better equipment in here and we'll get you on live on the show. We really appreciate you coming on.
Sure stuff. Thank you for having me.
All right. 845 S&Ps have settled into a little range here. Over the last 2 hours, we've been in a very tight trading range, basically between 25.65 and 25.67. So quiet before the open. Dennis, what movers you want to focus on?
There's so many, and there's some ratings changes here too. I just want to have one more rant here before we go into individual stocks. I want to talk about this FIZZ comments from yesterday from the CEO, and the stock has been beat up. I mean, FIZZ, and you've been on this stock, Joel, for a long time. You liked the stock way back before, it even had its big run up there earlier in the year. Stock got up to 130, just looking at the, the daily, actually 129.82 back on September 11th. Since then, it's been straight down. It's now $97. And I guess the CEO was sick and tired of seeing his stock go down. And he had a rant yesterday in a press release. Spencer, tell us what the CEO said.
Oh, okay. The CEO
read us some of this press. This is an official press release.
This is an official press release released around 11:30 yesterday morning. Midday press releases, which are rare in and of itself. Okay, so it's basically a rambling creed against people on Wall Street. Here's what we got. FIZZ revenues have grown. This is how it starts. FIZZ revenues have grown 60% over the last 10 years. Now, all caps, all organic growth, no acquisitions, exclamation mark. Organic growth has now accelerated, exclamation mark, all caps. What's creating this volatility relative to the stock market with FIZZ? Today, less than 15% of the daily volume traded on major exchanges is financially driven by company fundamentals. Over 50% of all daily exchange volume is driven by traders gambling on fleeting price moves and stocks paired with derivatives. Are perpetrators stimulating self-serving movement by stating falsehoods, creating rumors, and deliberately manipulating FIZZ value? We think so. And then that's and then it goes from there. It's rather short. It's about a 2-page press release, page and a half press release.
It's an official press release that looks like some kid wrote it. First of all, it's got all caps everywhere. It's got some colors on it. It just looks ridiculous from just looking at this press release. And I can tweet out the link too to it. And they were talking about this yesterday. This is kind of yesterday's news, but I just want to have a rant on it too. I mean, here's one thing he's saying: our high frequency trading bot stampeded results, inflated short positions, and current world anxiety, stimulating strange and unprecedented circumstances. I mean, he sees the stock go from 130 to 96, and then he decides to blame the whole thing on high-frequency trading, basically, in this thing. Worry about running a company, buddy. I mean, here, as a CEO, this should be worrying about running his company. Don't worry about where your stock price is, because if you run a good company, the stock price will follow. I mean, if it doesn't, the shorts are going to get killed because, there's lots of things you can do when you run a good company. But here he is worrying about where his stock price is, blaming it all on high frequency trading, basically saying our stock has no business being this low. And I don't know why it's this low, and I'm mad about it. So I'm going to write this ridiculous press release and blame and say the whole markets are messed up and it's all just, high frequency trading, putting price everywhere. So first of all, even if this was true, and, maybe some of it is, maybe some of it isn't, you're a professional here. Act professional. This is not professional whatsoever. This makes me want to short your stock, buddy. That's what it makes me want to do, because it makes me think you're not worried about running your company. You're too worried about where your stock price is. So run your company. That's, my rant on this. Other than that, I mean, maybe there's something to take out of this. Maybe the company is really doing really, really well. And maybe this is a buying opportunity for it. What do you think on the technicals, Joel? Because you've followed this company for a long time. What do you think of his comments yesterday? And what do you think of the chart on FIZZ?
First of all, his comments, I know, what side of the fence you're on as well as Spencer, and it's absolutely ridiculous. But, just let's take it aside from this company and, look at HMMY, why now this is a totally different thing, but what were the fundamental reasons for that going up to 38.86? I mean,
just momentum, just ridiculous. It gets going in one direction. The ball gets going in one direction in this market, and you can't stop it. And it's because everybody's running the same damn trading systems. Everybody's running Momo systems. Everybody's scared to be contrarian, really, until you get an official break of trend. I mean, that's why you gotta, you gotta be following trends. It's so hard to be a trend fighter. And for years, I've been in the market trading professionally for almost 20 years here now. And, there's been markets that contrarians have traded very well in. I will tell you, in the last 5 years, it has been a tough contrarian trade because the ball gets going in one direction and it is relentless sometimes, and it keeps going in that direction. Your stock is hated, it keeps going down. Your stock is loved, it keeps going up until it doesn't. And maybe there's a catalyst, and sometimes, it just takes Citron. Andrew left with HMNY to come out and say, hey, look, we think this is a $20 stock. 3 days later, it goes from 38 to $20 because somebody had an opinion on it that was influential. Sometimes that's what it takes as a catalyst to turn it the other way. Maybe that's what FIZZ needs now as a catalyst here to get it going the other way. Maybe that's what the CEO was trying to do, was be the catalyst for that. I don't think this press release coming from here is a catalyst to drive the stock price higher in any way whatsoever. But I'll tell you, straight up July, August. I mean, look at the chart, Joel. You go out the weeklies. From 2017, we started $45 in January of 2017. This is this year. It's went 47, 60, 80, 100, 129. It was an incredible run. Should it have a correction? Should it have a pullback eventually? Yes, it should. And that is what it is experiencing now. It broke trend, and now the trend is clearly in the last month and a half down. So until it can start to break that new downtrend again, the trend is your friend in this market. It's so hard to fight the tape.
All right. With this one, I mean, it's hard because where do you figure the 50% retracement from, right?
From 40?
Yeah. 40 to 130, you still got 45 points. That'll take you 90, 95 area. I see this low here. If I was going to get interest, I'd like to see how this thing acts around 92, 93. You had a low back in July at 92.32. Bunch of daily lows in that area too. So maybe come down here, see how it trades in this area, 92 to 93. But, once again, now if you're picking this thing up, now you're going to be fighting all these people above triple digits that are stuck in the thing. So a lot of volatility in it, but maybe I'd be waiting it to come down 92, 93 because you had a series of lows in that area.
Looking here, where was it in the chat? Somebody just said something interesting. Yeah, Biop was saying the FIZZ CEO wasn't complaining when HFT ran his stock from 40 to 130. There was no press release then. He was loving HFT then. Now they turned on him a little bit. Now he's running it the other way. And I mean, it all depends on how you define high frequency trading as well. I mean, some people say any short-term trader, you look at Warren Buffett, that's the one thing about high frequency trading. I'm going to define it different than Warren Buffett's going to define it. I define and look at high frequency trading as obviously your market making algorithmic systems like Virtu Financial that are trading, in millisecond time horizon, where, I see myself as more of a short-term trader, even though sometimes my time horizon is even seconds or even minutes. So I don't really see myself as a high-frequency trader. But I bet you if I said to Warren Buffett, oh, yeah, I'm going to hold the stock for 3 seconds, I bet you Warren Buffett's going to say, you're a high-frequency trader. So it's a little bit of, perception there too. And there's no official definition really of what exactly constitutes high-frequency trading. But if you're saying all short-term trading, if that is ran as a short-term, trading speculation is, people like me that are buying and selling your stock, well, yeah. That's the people who are in there buying and selling your stock and providing the liquidity to get in and out of your stock. And if you decide all of a sudden that, you don't want any of those people participating in the market, we go back to 2-point spreads on your stock or 5-point spreads, buddy, because it's the short-term speculators that actually provide liquidity to the market.
All right, 847. We didn't have much earnings last night, huh?
We had a few. We just haven't got to them. ISRG had a wild ride here. So Intuitive Surgical stock was up 10, then it was down 10. Now I guess it's still down 10. Spencer, you got details for ISRG.
$2.77 versus a $1.99 estimate. Big beat. Sales 806 versus 763 million. So a nice beat on the sales number as well.
Not good enough. That's what it is. You see the pop, and then everybody says, oh, yeah, but this ran up 50 points in the last month, and it's not good enough. So then they turned around and hit it. Now we're trading down 2% in the pre-market. I mean, a 7-point move, you say, oh, it's down $10, but it is a $350 stock. So it's not that extreme of a move.
Wow. Throw out the high, throw out the low. That's 74.47. I guess maybe you can throw out the low. You got a buyer just above the 342. Let's call it 343 and change. That's where buyers have been stepping up in the pre-market after the big move. And I'll just call this whole 340 area, based on the daily charts. You broke out from there. You came back to it. So it was old resistance, new support. I think the bigger story with this one, and boy, the stocks that we cover and how the weeks go by, was it TRXC that was in the news this week? Yep. Was that like on Monday?
That was the yeah, they got their own little surgical procedure that got approved or on its way to approval from FDA. And the stock went from like $1 to $5, and obviously that's coming back down there too. Blame high frequency trading. We'll just blame everything. We'll follow the FIZZ CEO. We'll just blame everything.
Yeah,
I'll even blame myself.
If Dennis is sticking,
maybe I traded that. I can't remember. My time horizon is too short. I blame myself as well. Anyways, these are rants. So okay. Other stocks here, Honeywell, Schlumberger. I mean, we've had a lot of stocks report. We only got 4 minutes. If you want to hear about specific technicals, let us know. I want to get to a few of the ratings here though too, because there's some interesting ones here as well this morning. We got Lululemon catching an upgrade from Citigroup to a buy. Price target $73. This is one of those apparel retailers that has actually done very well, really considering where some of the other ones are. And 2017, well, not so much 2017 because it got killed at the beginning of it, but really since May, when we had the low down of $47, when everybody thought yoga pants were out of fashion. All of a sudden, they're back in fashion here now. We're at 61.5 this morning, trading up $1.42 on an upgrade from Citigroup.
Just longer term here, this whole $64 area, you gap down there back in March, late March, early April after report, and you challenged it once in July, almost got there in August, tried again in September. So that's a ways away to get there to clear 64, but that's the long-term level. Shorter term here, if you're looking for a target, you want to see what happens at pair of highs. You had a what is this, a 5-day high at 61.90, and then right there at 62 even. What was that one? Boom high at 61.5, 62. So that's the area. Above that, you can test out the highs of the move, and recent high, I mean, just under 64. That's just sticking out like a sore thumb to me.
Citigroup, bearish on Pulte Homes. They're downgrading it to a sell PHM. They're also initiating on LEN, I believe, at a buy. Was that right, Spencer? Citigroup, LEN, a buy?
No, they're upgrading it to buy.
Oh, they're upgrading it to buy. So I got a pair trade going on. They're upgrading LEN. They're downgrading Pulte Homes. And LEN is trading up $1.50 on that news. And Pulte Homes is trading down about 50 cents here. What do you think of the pairs trade there from Citigroup? I don't know.
When did these guys start doing pairs, Dennis? I mean, it just seems like it's a new thing. You know me, if I'm bullish everything in the sector. If I'm bearish everything in the sector. This stock, Pulte Homes, just came off a recent high. Is that an all-time high? Let me go to the monthly chart. Oh, no, this was a $48 stock. I mean, a lot of people stuck short in this thing. Couple lows around 27. We'll see if that can hold up and go back up, test the recent high of the move at 27.86. And then going to Lennar, LEN, getting a big pop, taking out the high of the move at 56.93. Let me see where the pre-market action, 58.23. But that is things up on very light volume, so be careful.
It's upgrade to buy though, so that's worth something there. And it was consolidating for about 2 weeks here. I like the breakout. I like this on a pull. I think 57. You're gonna have buyers all over the place in the lower 57s. I'm not chasing here this morning.
Yeah, fill the gap, 56.93. All right, Spencer, we can wrap things up.
A couple of ratings I just wanted to mention real quick that we didn't hit on. Harley Davidson upgraded at Argus today to a buy. Skechers, another upgrade, this time from Wedbush to our.
They had earnings. Skechers, we didn't talk about.
Oh, you know what they did? Yes, Skechers did have earnings. I forgot about that.
That's up 28%. Man, okay, give us the numbers quickly from Skechers because that's an incredible move.
All right, Skechers, they're reporting Q3 EPS 59 cents versus 43 cents, sales of 1.095 versus 1.07 billion. Q4 EPS 9 cents to 14 cents is in line with the estimate, sales in line as well, but they blew it away on the Q3 EPS 59 cents versus 43.
Well, we're just taking out all the resistance I have here on the dailies, 30.95. That's your pre-market high. 30's been a pretty important level here going back. I have the weekly chart up. I guess if you're really holding out, no think it's going to get there today, but just above 32. I see a pair of weekly highs at 32.67 as well as 32.71. So that's your major resistance in Skechers.
And can we get a quick and balanced look, Dennis?
Remember, it's option
Oh,
expirations.
you're right.
So you got to
You're
take
right.
these with a
You're
grain
right.
of salt because they're going to change very quickly
You're
here. Right now, financials are very strong. Bank of America 780,000 to buy. Good point by Spinner and a couple other people in the chat there saying the TLT is down $1. That's always good for financials. Actually, the Bank of America balances went to 2.5 million to buy.
Oh,
So huge buy. Citigroup 499,000 to buy. Morgan Stanley 263,000 to buy. JP Morgan 292,000 to buy. Wells Fargo 343,000 to buy. These are flying here this morning. I mean, your banks are flying. They're going to continue to fly. At least, if the TLT stays as weak as it is. So I'm not surprised that the banks are all breaking out here with the TLT as weak as it is. Whenever you trade banks, keep your TLT on your screen because it just moves opposite. AT&T and Verizon both have buy imbalances. I'm cautious there. One thing, Verizon did reverse a little bit yesterday. Secondly, TLT is down. We know those guys like to trade with the TLT more than against it. So be careful on anything that's interest rate sensitive here today. You're in your REITs, you're in your utilities. Those will all get beat up today because the TLT is down so much.
all right. 9 o'clock. That is it for our show today. And that's it for us for the week. You can catch any of the shows from this week on our podcast on iTunes, SoundCloud, and on Stitcher, or by going to youtube.com/BenzingaTV to rewatch our show as it aired live every day. So I hope you enjoyed our chats with Kenny and Cate today. We'll be back with you folks next week. Again, don't forget we have our special show, live Q&A with Gene Munster. It'll be Tuesday around 11:30. You can send your questions to Joel at benzinga.com. You can put them in the chat right now. You can tweet at us. You can go to Benzinga on Facebook and ask it there. I will be collecting all of those questions, and we'll be asking Gene Munster what he thinks about the world of tech in a live Q&A. That'll be, again, Tuesday morning. But that's it for us today, folks. Have a good rest of your day. Have a good weekend, too. And we'll be back with you on Monday.